All right. Okay. Welcome, everyone. Good evening. Welcome to the class. And so today we are going to start with a new chapter. I hope you all are ready and sitting upright, not lying down with paper, pen, notebook in your hand, ready to write down something that is important, and with a water bottle with you. And with this, we can start. I hope that you have been revising the previous chapters. You studied it on your own. When you study it in the class, that is not called as the first reading. When you read actually at home, that is your first reading. Good evening, Sadia. Good evening, Tanu. Good evening, Chandana. Good evening, Archana. Good evening, Pooja. Good evening, Adil. Good evening, Navneet. Good evening, Mr. Linga. So, we are here back together. So, I hope you are ready to start with the new lecture, new chapter. Excited to study audit of banks, completely different from what you have been studying till now. You'll learn a lot of things about banking sector, and it's going to be very interesting chapter and very different from normal audit theory. Of course, there'll be little audit theory, of course, but a lot of new things also will be there. A lot of interesting things you'll learn about the banking sector. Okay, with that, we'll start the lecture. So as usual, I will first explain a few things and then we'll see the book. Okay. So let's first understand the sector. Okay. So simple things. Okay. If there is a bank, what does bank do? Bank does simple thing. Suppose you want to give your money to the bank, that's called as deposit. What does bank give you in return? Bank gives you interest in return, right? And this money comes to the bank, and bank then passes on this money as loans. And what do they get in return? They give loans to different people. And what do they get in return for it? They get again interest. So what is the simple mechanism is that they give interest and they get interest. So by logic, what if bank wants to run on profit and have money to do with activities? Do you think that the deposit interest rate and loans interest rate can be same? Do you think deposit rate that they give to us and the loan interest rate that we pay can be same? No. So by simple logic, usually deposit interest rates are lower than the loan interest rates. Okay. And that is how banks are able to function through that margin that they earn, and that becomes their primary source of income. So their primary source of income becomes the interest margin that they earn as difference between the deposits and the loans. Now, do you think that if the bank has gotten 100 crores as deposit, they can give the whole 100 crores as loan? If there is 100 crores received as deposit, can they give whole of 100 crores as loan? No. Why? Because if I want to withdraw that money, the bank should have some liquidity to give me that money. If I am a depositor and I want to withdraw that money, bank should have some liquidity. And by that logic, we have something called as SLR, means statutory liquidity ratio, cash reserve ratios. Why? So that a margin of liquidity is maintained and not all the money that you received as deposits is passed on as a loan. There should be something that keeps the liquidity in the market. Okay, in the bank. Okay, now banking operations, let's imagine a bank like State Bank of India, which is the largest bank of our country. Now imagine if you are auditor of State Bank of India. Now State Bank has a branch in almost every small city, town and village, right? In every small town, city, village, they can have multiple branches in a city, multiple branches in town. So we can easily say they might have lakhs of branches and crores of transactions per day. both in terms of volume and monetary. Okay. So now as an auditor, you imagine that when the volume of the transaction is so high, especially now that UPI has also come, everyone can easily do transaction from your phone through a scanner. So each bank and each person is doing multiple transaction per day. And now that you imagine the population of our country, imagine that each bank is going through so many transactions. Now think of yourself as auditor. Does it not become very crucial for you to have some guideline on how can you manage an organization as big as a branch and do justified audit that is able to produce assurance to the stakeholders? Imagine it is so difficult. Imagine the volume is so high. And that is why in banking, there is importance of internal control system. If I am made auditor of even one branch, there could be crores of transaction per day. So suppose all of you are, let's say, bank account holders of a particular branch. Okay. So do you think I can check each and every transaction and each and every UPI payment that you all are doing per day? So I'll check for the whole year each and every transaction? No. And that is why the most crucial thing in a bank audit is what? Is what? A good and reliable internal control system. And that is why banks have something called as core banking solutions. So their internal control is core banking solutions. What is it? Core banking solution. So this is a very elaborate form of ERP. So you know Infosys company, right? So one of the products because of which Infosys became famous is they created something called as Finacle. Finacle was a type of CBS which gives internal control system and accounting the whole banking runs on that software. So many banks use it. It's a product that was created. So this thing becomes very important, right? So now that we start this chapter, we need to understand types of bank. We need to understand audit procedure. And then we need to do actual audit. And this all we can do if we understand banking terminologies. If we understand banking terminologies. Okay. So this is what the chapter will try to do. This will be very unique because here we will be studying different kind of products that a banks offer and what are the different ways it works. And then we will use it to do proper audit and how to do it. So this is the whole basic overview of a bank. Everyone is clear? Can I start with the theory now? Can I start with the theory? Basic is clear? Okay. All right. Good. Let's first start with types of bank. First, we'll start with types of bank. Okay. So the first and the most famous type that we all use, those banks are called as commercial banks. Okay. The banks that we all use, HDFC, Kotak Mahindra, all these banks are called as commercial banks. They are the most widely spread banking institution in our country, and they provide a lot of different products. Okay. A variety of products are given. A variety of products are given to the general public. And the two main functions is they accept deposits and they grant advances. So these are the two main tasks. So the first type of bank is very simple, are commercial banks. Second types of bank, you might have heard about them, are called as regional rural banks, RRBs. Okay. The second type of bank is regional rural bank. What are they providing? They specialize to provide services to rural communities. They specialize in products, they specialize in offering products and services that are required for the financial needs of rural communities. So according to the individual different kind of villages, different kind of needs of our rural India, they have special products which are not maybe useful for us who are city dwellers. Okay. So usually these banks have Grameen word in it. So for example, Punjab Grameen Bank. So if you see that word, you can think that they are RRBs. Now, where will all this be useful? In exam, this will be useful for MCQ. Okay. Where will all this information be useful? It will be useful to you for MCQ. So mark it that it is useful for MCQ. So these are the different kind of second type of bank, that is RRB. The third type of bank is a cooperative bank. Do you remember? We studied cooperative societies in previous chapter. We studied cooperative societies in previous chapter. So they are similar to commercial banks, but work on cooperative principles. They work on cooperative principles, plus they are registered under cooperative state acts. Okay. So the difference is that they also are like commercial banks. They also offer deposits. They also accept deposits. They also give loans to public, but they work as cooperative, which means they work for the benefit of the members. Okay. Next is the newest type of bank. This is actually something that I have seen develop. So this did not even exist when I became a CA. Okay, this kind of banks didn't exist when I became CA. They've slowly emerged. They are the newest form of banks. So I remember that when Paytm first came, okay, when Paytm first came, or any kind of these wallet services first came, what was the purpose of the wallet? Was suppose you have a wallet online, and from your bank account, you deposit, let's say 10K in the wallet. Okay. 10K is deposited in the wallet, and now through this wallet, you keep making payments. What is the use of it? That in a bank statement, you will see only one transaction. And then from wallet, you can do multiple transactions. So your bank statement will not be cluttered. Your bank statement will show just, okay, I have transferred 10,000 rupees to the wallet. And then from wallet, you keep making 20 rupees, 30 rupees, 100 rupees, 200 rupees. That is the logic of the wallet. I hope everyone knows that, right? That is why the wallets are there, whether it is Amazon Pay wallet or Paytm wallet. That is the purpose. Now, what happened? That initially when they started, everyone was depositing money, but there were no rules to govern this money. Okay, so if I have given my money to any private wallet online, and if I lose that money, or if that company shuts down, there was no security that my money is protected. And over a period of time, as and when the wallets start becoming a regular, famous thing to be used by the citizens, to protect it, the government came up with payments bank. Okay, the payments bank were created, and that is why, if you remember, few years back, it became compulsory to do KYC to run a wallet in Paytm, or even if you are running an Amazon Pay wallet, you need to do KYC. Okay, because it's like opening a bank account and depositing money in it, and that is what it happens is now these come under the regulation of RBI. So, and because it was not a bank previously, RBI could not govern it. RBI couldn't protect you and your deposits. But then when these became Paytm Payments Bank, Airtel Payments Bank, so when this Payments Bank came, it came under the registration of RBI. And if you're making any fault, if the company is doing any default, the RBI is there to protect our money. Okay. So Paytm's bank are a new type of bank. Firstly, everyone understood what is a payments bank? Everyone is clear what is a payments bank? It is the newest type of bank. Okay, I have actually seen it emerge it. Okay, so it is newest type of bank. So this is very recently. Now, what is the unique feature? Now you tell me that can Paytm sort of payment when you open this wallet, can they give us credit cards? Can they give us credit cards? Can they give us loans? They can just accept our deposit. They can just take our money and keep it. So what is this feature of this new? So they allow, one second, they allow restricted deposits. They allow restricted form of deposits, but cannot issue loans or cannot issue credit cards. All this they can't do. Okay. But what can you do? You can open current account, savings account, then ATM, debit cards. All these are allowed. All these things are allowed. Okay. Ma'am, payments banks simply work as intermediary, right, ma'am, and control over and high payments. It's not intermediary. If it is an intermediary, it would be like just a wallet, which was in when it started, it was just like an intermediary. But now, if you're depositing 10,000, 15,000, you're uploading to a Paytm wallet, it is a bank where you're depositing money. Is that clear, Anil? So it is like a small bank where you're depositing money. There are restrictions on how much money you can deposit, but they are like a bank only. They are a bank actually, not like a bank. They are registered with RBI. They have to follow all the rules and they have to get registration. Is that clear? When it started, a current account, Navneet, you're asking if you know this. Have you made payment on Paytm to someone and their business name came? Have you seen that you made payment to someone on Paytm or this bank, their business name came? So that is a business account and hence it's called a current account. Is that clear, Navneet? It's not that you can take working capital, cash credit limit and all that. But the businesses, when they open account, it is called as current account. Is that clear? Okay. So all these services are offered by the Paytm's payments bank. So you know the examples of it. You know Paytm Payments Bank. All these are very new. Okay. Then, of course, you have this Airtel Payment Bank. So many are there. But these are usually the payments bank. Okay. The newest form of banking. Now, next type of banking is development banks. What does development bank do? So see, whenever there is a very large infrastructure project, everyone understands what's a gestation period. Everyone understands what is a gestation period. Gestation. Gesta, gestation period. First, tell me what does it mean? Gestation period. Very good, Kuldeep. Time to complete project and get the output. Very good. Do you know that a project like oil refinery or a flyover can take multiple years to even complete? Everyone knows that. It can take so many years to even complete, and then it can take so many years for it to become profitable. Everyone knows that. That period is called as gestation period. Now, what happens? Our normal banks, our normal commercial banks might have problem to give their money for such a long duration of time. Okay, they might not have that much risk capacity. And that is why there exists specifically a bank category called as development bank that provides fund for infrastructural facilities for economic growth. So for the growth of our country, these banks invest 100 crores, 200 crores, 300 crores for 5 years, 10 years, big duration, big money. So when a bank is specifically working on giving funding for infrastructure facilities, that is called as a development bank. Have you heard about IDBI Bank? IDBI, Industrial Development Bank of India. IDBI. Then you must have heard about SIDBI, Small Industries Development Bank of India. So these are development banks. Another is IFCI. Yes, IFCI is Industrial Finance Corporation of India. These things you should know. You can get in MCQ. That's why I wrote on the top. This topic is important for MCQ. So you should know these full forms. So development banks, Industrial Development Bank of India, Small Industries Development Bank of India, Industrial Finance Corporation of India. All these are development banks. All right. Next type of bank, small finance banks. So, over a period of time, it was observed that these normal banks like Kotak or SBI, all these big shot banks, they are unable to uh, address the needs of unorganized sector. So they need so many documentation proof. They need your home proof. They need your residential proof and office proof and land proof and building proof, and so many proofs are needed that it was not able to serve someone who is opening a small thela or a vegetable vendor. These unorganized sectors were not being able to get the benefits of banking sector. So someone is running a small cottage industry to make cotton, or someone is running a small cottage industry to make soaps. They were not able to get benefits. And small individual urban poor, so people who are in urban poor but doing some own business like running a maybe pani puri stall, so these kind of people were not able to get benefits. And that is why the next type of bank emerged, that is called as small finance banks. Small finance banks are made available to unserved and unorganized sectors. Okay. They are for unorganized sectors who like small and micro business units, small and micro business units, or small farmers. They help them. So they help in serving small businesses which are usually not served by bigger banks. So unorganized sectors are served by them. And small finance bank examples are Equitas, small finance bank. So what these banks do, they also need deposits. They also need deposits now to be able to give loans. They also need deposits. So what they do, they attract consumers like you and me. So if I have savings, I will usually go to these big banks, right? But to attract people like me, any kind of customer, they offer higher FD rates or higher saving bank interest. So usually they offer higher than your normal government banks and private banks to attract people to give money to deposit in their bank so that they can continue their business of giving small finance. Okay. Is that clear? Yes, yeah, they work, the development banks work in different ways according to their registration with RBI. Some are only B2B, some are B2C. Is that clear, Dia? So some development banks can be only B2B, okay? They work with different banks and collaborate. Some work B2C. Is that clear? Dia, your doubt is clear? And everyone else, everything is clear? These are the different types of banks. So what did we study? The different types of banks that we studied is commercial banks, regional rural banks, cooperative banks, payments bank, development banks, and small finance bank. Okay? Clear. Okay. All right. Now, if you'll see your book, this part that you see, this is just to read. This is not something you have to study from exam point of view. This is just an introduction, so you don't have to study all this. Here you can mark it in book very clearly. It is for MCQ. Okay. Important for MCQ. You can get, and you can get easily money, this marks from it. Here just add extra. Development banks are also called as term lending institutions. Okay, just this 1 point extra you remember. Rest I have completed everything. Okay, rest everything is completed. So here you have to remember meaning plus examples. Okay, for MCQ. So exam, it can come like Punjab Grameen Bank is which kind of bank? Commercial bank, RRB bank, small finance bank, payments bank. So you can choose RRB. So very simple questions will come. So you can remember this. Done. We'll move on to the next part. Now there's some generic points. Again, this is only read only, okay? Till here, from here, okay? This is read only for understanding. So here you don't have to memorize. Ma'am, will audit procedures vary for each type of bank? That is universal audit rule that your base is same, but checklist may be different. What do I mean by that? You have studied audit procedures that it should include risk assessment, then further audit procedures. In further audit procedures, it should have test of details, and then it should have analytical procedures. Okay, this is like a universal audit procedure. So these don't change. So if I'm going to any bank, of course, I have to do inquiry. You remember inquiry, observation, inspection. Do you remember this answer from essay number 500? Inspection, inquiry, observation, analytical procedures, recalculation, reperformance, all these points. So those points don't change. So whether I'm doing a Grameen Bank audit, there also I have to do what? Inquiry. If I'm auditing a small finance bank, there also I have to do inquiry. In cooperative bank also I have to do inspection, and the other bank also I have to do inspection. Is that clear? So everywhere I have to do this. That doesn't change. Okay, Anil? But the only thing that may change is what? That they might have different softwares. Grameen Bank might be using a different software, and the commercial bank might be using a different software. So my commands may change, and they might be maintaining different kind of registers. I have to do inspection, but in Grameen Bank, the register may be different, and in commercial bank, the registers may be different. So your ICAORR, I think your teacher taught this, very good, a very nice thing. So your ICAORR will not change. But we studied in previous chapter, na? Cinema, hospital, SIP real doesn't change. We have to check receipts. We have to check expenditures. We have to check constitution. That doesn't change, but points change. Is that clear? Is that out clear? Can I move ahead? Anil? Audit principles don't change from audit to audit. Only what exactly to check that changes. Okay. So now the topic that we are going to do is just for reading and understanding. It is not that it will have a direct question, because it's just introducing you that any bank in our country is regulated by the RBI. So this much you can know, na? If in MCQ it is asked that who is the regulating body of any bank? RBI, madam. Okay. So you don't have to study this from the theory perspective, just from basic understanding perspective. So it is regulated, all the banking industry is regulated by RBI, which is the central bank of our country. Of course, we know that. Do you think in audit paper, the question will be that what is RBI responsible for? Do you think in auditing paper, the question will be what is the functions of RBI? But do you need to know to have the base? Is it important to know what does RBI do? Yes. So that I can be a good bank auditor, I need to know about RBI. But it is not necessary that it will be asked in exam that what is the role of RBI. But we need to know. So RBI is responsible for development and supervision of constituents of Indian financial system, which means it has both bank plus NBFCs. So RBI is responsible for both development and supervision of banks and NBFCs. Next, it works with central government to keep any monetary and credit policy. So someone mentioned repo rate, reverse repo rate. Who monitors these things? RBI in conjunction with what? Central government, so that our monetary and credit policies are properly maintained in the country. And then it regulates the activities of commercial banks. What you can do, what kind of loan you can do, what will be the base rate, all this is monitored. What is the important functions of RBI? They issue currency, they issue it, they regulate it. Okay. So with respect to currency, what do? They issue it and they regulate the currency. Then they also provide money to central and state government. So if central government needs money, where will they go? RBI. If state governments need some loans, where will they go? They will go to RBI. They're also banker to commercial and other types of banks. So I cannot go and open a deposit bank account in RBI, but the RBI is like a B2B bank. It provides services to governments and other banks. Okay. No bank can commence the business of banking or open any new branches without obtaining license from RBI. Okay. RBI also has power to inspect any kind of bank. So these are the general things, nothing specific in here, very easy peasy. Banking operations are conducted only at branches. They can have other offices like administrative offices, which create policies, systems, internal control. All these things are done. And they also have compliance of accepted accounting policies. So here, nothing you have to read. Do you remember when I started the chapter, I told you that for any bank to function, they should have good internal control system? That's it. That is what it is introducing to you. So no, nothing to be learnt in that. So that part is also done. Now here you come and mark as very, very important. This is very, very important. Mark this. It can come as theory answer plus as MCQ. Okay. It can come both as a theory answer and as an MCQ question also it can come. So what are the points? Let's do that. So question is the regulatory framework. Regulatory framework. Okay. What does it mean? It means that if I want to run a bank, okay, what are the different AFRF? Do you remember financial reporting framework? I taught you, you must have been studying from chapter 1 also, and I also revised for you when I taught you chapter number 8. I told you about what is AFRF. Okay. So in any kind of business, there are certain regulations that are applicable on you. Now, I told you that how critical banking sector is for our country. So there are many kind of laws that are applicable on a bank. Let's study it one by one. First, there are three types of banking. What are they? First is Banking Regulation Act. Banking Regulation Act 1949. Then Banking Companies Acquisition and Transfer of Undertakings Act 1970, and same thing is there except it is 1980. What does this mean? The first three acts, let's talk about. The first base act on which any bank runs is Banking Regulation Act. Under this only most of the policies are there, most of the rules are there. Under this only most of the circulars are issued within the banks. So this becomes your base. Okay. Now there is something called as Banking Companies Acquisition and Transfer of Undertaking Act. Do you know, for earlier there used to be State Bank of Patiala, State Bank of Travancore, State Bank of Mysore. Then there used to be a bank called as ING Vaishya Bank. These used to be many, many banks. Now what happened? They were taken over or they were merged. So when a bank takes over another bank, so there used to be a bank called a syndicate bank. While growing up, you might have heard the name. Did you hear the name Syndicate Bank? Syndicate Bank. So it was taken over by Canara Bank. Now there is only Canara Bank. There is no Syndicate Bank. So if a bank takes over another bank, imagine how big task it is. Don't you think so? It will be such a big task that a bank is taken over by another bank. Their customers, their bank account numbers, all their loans, all their deposits, 100 different types of FDs, 100 different types of recurring deposit, 100 different types of normal savings bank, so many types of current bank, everything needs to be taken over. So it's a very, very complicated task. That much we agree. So there should be some law that governs that how something can be overtaken or undertaken and transfer can happen. So this all is helped by that. So these two acts are Banking Companies Acquisition and Transfer of Undertaking Act 1970 and 1980. Both are still existing. It is used in different situations. Okay, we'll not go in too much detail about that. So this much is done. Okay, now think about different types of bank. You can be either Companies Act bank, a normal registered as company. You can be RRB, Regional Rural Act 1976, or you can be State Bank of India Act 1955. What are the next 3 points? On the basis of first 3 points, what did we hear? Banking related. Banking regulation, Banking Companies Acquisition and Transfer of Undertakings Act 1970 and 1980. Now, so if I'm running a cooperative society, will Companies Act be applicable on me? If I'm running a cooperative bank, will Companies Act be applicable? No. So there are some banks which are registered primarily as company, then Companies Act is applicable. If you are registered as RRB, then RRB Act is applicable. If you are registered as SBI, State Bank, then State Bank has its own act. They have their own act called as State Bank of India Act 1955. So they have their own structure, own rules. So these are the other types. Then on the basis of work, on the basis of what the work is done inside the bank. They have multiple things. Information Technology Act 2000. So when you and I are making passwords, right? You and I are making passwords and we are doing this online transactions and all, it should be protected. Don't you think so? All the technical acts should be applicable. We should be protected properly by IT Act. So the other act that is applicable, on banks is Information Technology Act. Second way in which banks are used is for transfer of money. So to ensure that no one is doing black ka white ka black and all that, there is something called as Prevention of Money Laundering Act 2002. Okay. So to ensure that the banks are not used to do black ka white and all these things. You know what is money laundering? Laundry का मतलब क्या होता है? What does laundry mean? Dirty becomes white, right? So to convert black money to white money and all these things, that should be prevented. So who gives guidelines to bank that how to prevent it? Prevention of Money Laundering Act 2002. Then Credit Information Companies Regulation Act 2005. How is this there? So all the details, yes, PMLA is there, but it's not yet there in your book. PMLA is also there, but not there in the book yet. So Credit Information Companies Regulation, this is to protect the private information of all the borrowers, that how much loans they have taken, how much failure to pay of loans has happened. So all that information, credit information protection and how to regulate it, all that is protected by Credit Information Companies Regulation Act 2005. Okay. Next act is Payments and Settlement Act 2007. What does it mean? So you all know about check, you know clearing system. Everyone knows what's a clearing system of check? Quickly tell me. Everyone knows what's a clearing system? Check, yes. Yes. So there is someone who is monitoring and creating the system, that how a payment is done, how the settlement is done, how debit is done, how credit is done, what to check when the credit is done, when to put hold on the credit. All these parts are covered by Payments and Settlement Act 2007. So with respect to work, what are the four important things that it is done? Okay, what is done is Information Technology Act 2000, Prevention of Money Laundering Act 2002, Credit Information Companies Regulation Act 2005, and Payment and Settlement Act 2007. It will take time, but if you do it 3-4 times, you will be able to remember. MCQ definitely you will be able to do. MCQ में तो आपको बिल्कुल you will not face any problem. Okay. So as of now, what did we study? We studied that banking has multiple acts applicable on them. First is banking related, that is banking regulation and banking acquisition and transfer of undertakings. Then types means Companies Act, RRB Act, State Bank. Then types of work that banks do to protect that. So everything is done digitally. So there should be IT Act to protect. Money is involved. So there is Prevention of Money Laundering Act. My information is there about my credit. So there is a Credit Information Regulation Act, and money payment and flow of money is there. So Payment and Settlement Act is there. Okay. Now just last one is pending. So the name is very big. It's called as, but very important act, Securitization and Reconstruction of financial assets and enforcement of Security Interest Act 2002. I know it's a very long name, but it is such an important act. In day-to-day language, we call it as Surface Act. What do we call it? We call it as Surface Act. Now, why is it important? So suppose I have taken some loan from the bank and I have given my home as mortgage. Okay. Now I am unable to pay that loan to bank. Now bank needs to be able to take over my home, needs to take possession of my home, and should be authorized to sell my home. Yes or no? Bank has taken my home as security. Now they should be able to enforce their right on my security, on the home, right? Which act helps them to enforce their right on the security? It is the Surface Act. Understood? So if any property goes for auction, do you know what's auction? So I'll give you a small understanding. So if I have given my home as security to bank, and if I don't pay the loan back, the bank can take over my home, they can take possession, and they will auction the property. Means they will put it on auction, and anyone who's interested can give what amount they want to pay. And to be able to do this auction, which act is important? Surface Act. Everyone clear? So for bank to enforce their interest in the security, to do properly, that secure surface is enforceable. This is very important act. Okay. So securitization and reconstruction of financial assets. What is financial asset for a bank? All the properties that we give to them, that will be the part of all the financial assets that the bank has. And enforcement of Security Interest Act. Done? Can you remember at least 6-7 points from this? I know there are a lot of points, but can you at least try to remember 6-7 points out of 11 points? Okay. All right. Now let's go from bottom to top. We'll do it once more so that you remember it. To be able, so that bank can enforce their right on the securities, there's Surface Act 2002. Then to be able to work smoothly and to protect our money and our information, they have 4 acts: Information Technology Act, Prevention of Money Laundering Act, Credit Information Companies Regulation Act, and Payments and Settlement Act. Then on the basis of different types of banks, there can be Companies Act, RRB Act, and State Bank of India Act. And on the basis of Banking Regulation Act, Banking Companies Acquisition and Transfer of Undertaking Act. Okay. Everyone clear? Can I move on to the next topic? Very, very important this. Okay. Very, very important. It has also come in exam that just mentioned the regulatory framework of the bank. And then you have to write the points. Okay. Next. So this is again generic point. Peculiarities, special features of banking. Okay, what are the special things in banking? Again, a generic point. You don't have to put too much energy into this. So why is banking audit very special? There is huge volume of transaction and very complex transactions can be there. It can be present in many, many places, wide geographical spread. They have large number of products. Do you know these days, even in FD, they will have 100 products. Even in saving account, banks has 100 different types of saving account. Platinum, Prima Platinum, Privilege Platinum, gold account, silver account. There's like 100 different ways in which they give products. extensive use of technology, and strict vigilance by banking regulator. Huge, uh, like most of the banks have once in a year, they'll get RBI audit and all done. So lot of control is there by RBI on them. Okay. Now, next is types of bank audit reports to be issued. Mark this as very, very important. Types of bank audit reports to be issued. Okay. Let's understand. Types of bank audit report. Now, why is the word generally written? Can anyone tell me why is the word generally written in the book? Why is the word generally written? Yeah. It can change from bank to bank, but this is applicable in most of the cases, most in general. But does it mean that this is a strict list? No. Can it change from different kind of banks and as per different years, as per different requirements? Yes. But this is in general that is expected out of banks, that these many reports will be there. Okay. Uniform but flexible. Very good, Adil. Very well said. Now, before I tell you types of bank audit report that is to be issued, I want to introduce you to statutory central auditors. Okay. Let's say that I stay in a city. Okay. I am a chartered accountant. I have my firm. Let's imagine I have my firm and I want to become a bank auditor. And I have been allotted a branch in my city. So let's say if it is SBI, I am staying, let's say in any city, let's say Bangalore. And there is a branch in Indiranagar. Okay. So I am made auditor of this. Am I a SCA? Am I an SCA auditor? Am I statutory central auditor? Or am I just a branch auditor? What am I? I am just a branch auditor, which means SBI might have lakhs of branches, but there is someone who is auditing whole of SBI, and that is called a statutory central auditor. Do you understand? Statutory central auditor. Imagine the work. Okay. So these reports that we are we studying from branch auditor perspective or are we studying from SCA perspective? These types of report to be issued, are we studying that SBI की इंदिरा नगर की ब्रांच को क्या रिपोर्ट देनी है या हम पढ़ रहे हैं कि SBI को कौन सी रिपोर्ट्स देनी है SBI के ऑडिटर को okay. So let's first thing clear, these reports we are studying is with respect to SCA, statutory central auditors. Okay. So let's start. What reports they issue? The first and most common thing that the statutory central auditor will issue is adequacy and operating effectiveness of internal control system. Now see, Indira Nagar is a very big area in Bangalore. For those who don't know, it's a very, very big populated area of Bangalore. If I am even auditor of one small branch, there will be crores of transaction, lakhs of customers. Do you think I can check each and every transaction? of that Indranagar branch? Do you think I'll be able to check? No. Now then imagine whether the SBI auditor of the whole bank, who is the statutory central auditor, do you think he can check each and every transaction? Do you think he or she can check? So the first thing that they will have to evaluate is what? Whether they can rely on the internal control system of the bank. And that is why the first thing that they will have to comment on is adequacy of and operating effectiveness of internal control. But remember, it is for banks registered under Companies Act. Okay. It is for banks and registered under Companies Act. It is like an annexure to main audit report. Is that clear? So auditor has to give comment that whether he thinks that first internal control is sufficient. जो सिस्टम है वो sufficient है कि नहीं, adequate है कि नहीं. चलो सर adequate है, but चलता है कि नहीं. That is called as operating effectiveness, whether it is working or not. You have made a very elaborate system, but is that system functioning or not? So adequacy and operating effectiveness of internal control system पे auditor has to issue a report. Second, do you remember Caro? Do you guys remember Caro? Do all of you remember Caro? Do you remember in that I told you not applicable companies? Companies on which Caro is not applicable. Do you remember that? In that, one of the companies was banking, which means that Caro thing is not applicable on banking. Insurance company. What was the format of Caro? It was like a Q&A, right? Government has given lot of questions which auditor has to answer, yes or no? Now, why was Caro not applicable on banking? Because banking has its own Q&A report that is called as long form audit report. It's called as LFAR. It's called as LFAR. So, ये banking sector का, this is banking sector specific report, which is also a Q&A style. So there are, this format is issued by RBI. Every year they issue it. They can change it every year. So they issue this format and we have to answer all the questions. So banking sector, the auditors have to give one report called as LFAR report, long form audit report. Third that auditor has to give report is compliance of SLR. What is SLR? Statutory liquidity ratio. That the bank is following and maintaining their SLR correctly, auditor has to give this. This is very important because if SLR bank is not maintaining, it can affect their solvency. It can affect the liquidity. It can affect their customers. So this is a very important thing that auditor has to, we have to give a lot of reports. Do you know in bank audit, sometimes it can take many days to just do the reporting part. Okay, so it can take a lot of days to just do the reporting even after audit is finished because reporting is very, very extensive and detailed. Next we have to see whether treasury operations is as per RBI. What is treasury? It is currency chest. So a lot of banks operate their currency chests, which means they have money that is stored with them. It is in rupees, it can be in dollars, it can be in various other currencies like pound, yen. So whether those operations, the movement of money is done as per the instructions of RBI, that also certificate, that also report we have to give. Next, the report that we have to give is regarding ICAI. I'll tell you what it is. Income recognition and asset classification. This we will study in lot of detail in this chapter. Income recognition and asset classification and provisioning. Have you heard the word NPA? How many of you have heard the word NPA? How many of you have heard the word NPA? Yeah. So this ICAI is regarding that. We will study in detail in this chapter in next 1 or 2 lectures. Okay. So right now I'm not going to go there because it will divert our wave completely. But just remember, this is with respect to that how the interest income, how the EMIs are regulated, how the assets are classified, whether they are performing well, not performing well. So that is followed correctly. So that also we have to give a report. Is that clear? So as of now, just remember this. I'll teach in detail. Okay. What did I do? Oh, ICAI. Sorry, IRAC. So sorry. IRAC norms. Thank you, Virali. So IRAC norms we have to follow. Okay. Income recognition and asset classification. So this we will study in lot of detail. This is actually the crux of the chapter. This is the most important part of the chapter that we study. Okay. Next, auditor has to give report on any serious irregularity. This could be anything. This could be any amount related problem, any classification related to problem, any violation of rules, any violation of policies. So any serious problem that auditor has to decide whether it is serious or not. So auditor can give a report specially for that. Next, Ghosh committee and Jilani committee. Okay, pay attention. Ghosh committee, Jilani committee. So in 90s and early 2000s, uh, the banking sector went through a little bit of crisis. Okay. And at that time, a committee was formed by the government. There were Ghosh committee and Jilani committee. And Ghosh committee gave recommendations relating to frauds that can be done by bank and other malpractices. Mal means wrong practices followed by the bank. And Jilani committee gave a recommendation. Again, they gave recommendations on internal control, how the bank has to maintain internal control and how they have to maintain their inspection system, credit system. So these two committees were created, which gave recommendations. Ghosh committee gave on what? Frauds and malpractices. Jilani committee gave on what? Internal controls and inspection and credit. So as an auditor, every year we have to give a report whether these recommendations are being followed or not. Is that clear? So there's a fixed format for this. There's a list that has been created by Ghosh committee and there's a list that has been created by Jilani committee and we have to mention like a tick mark and whether it is being followed or not. So the next report that is given by all auditors actually from what I have seen, that is Ghosh committee and Jilani committee. And next auditor has to see whether any adverse credit deposit ratios. What does it mean by adverse ratio? It means that the loans given are more, but the deposit is very less. So if you see very adverse ratios, you can usually see in this rural areas where people have taken loan for their agriculture business, but they don't have enough savings to go and deposit in the bank. So in rural areas, you can find a lot of imbalance that the deposits are much less and the credits are very high. So if there is very adverse credit deposit ratios, auditor needs to give a report on that also. So what all does an auditor needs to give report on? The first important thing is you have to give a report on internal control systems adequacy and operating effectiveness. This is applicable for banks that are registered under Companies Act. Then auditor has to issue long form audit report. This is a special report applicable to banking sector only. Then they have to give report on liquidity, that is SLR. Then they have to give some reports on RBI instructions. RBI instructions for treasury operations. RBI instructions are being followed for income recognition and asset classification. Then if you find any serious irregularity, that also needs to be reported. You have to report on Ghosh committee and Jilani committee recommendations are being followed or not. And if there is any adverse credit deposit ratio in rural areas. Everyone clear? Any doubt? You can remember this? Do you think you can remember this answer? Okay, very good. Clear. All right. Okay. Now, understanding of accounting system in banks. This is again read only. This is only for understanding. Please mark all these things in the book only so that when you're revising, you know that how much and where I have to put my energy while revising and what things I have to read once only. Is that clear? So while customers, how many of you last visited bank? You might have gone for a draft and all, but nowadays each and everything is done anywhere, anytime. Okay. You can access your information and data on real-time basis. It is stored in proper, safe and secure environment of bank servers. You can do a lot of transactions through e-banking. A lot of core banking technology is used. So all these things because of which the transactions have become very voluminous. So recording, transmission, storage, everything becomes important so that it is free from errors, omissions, irregularities and frauds. And that is why you need to make your internal control system robust, safe, secure, convenient, and expeditious for your customers. Audit reports to issue is yes, yes. This is, if I'm marking it like this now, star mark, which means it is important for theory plus MCQ, okay? It is important for theory and MCQ. Clear, Ashlesha? So this is like this generic point is there. There is nothing specific that we need to learn. Okay. Just come here directly. Bank audit approach. Bank audit approach. There are 3 points that you need to see. Okay. Drawing an audit plan, control environment of bank and engagement team discussions. Okay. This is little bit new. That is why there are no patterns available. But I will tell you what you have to put a little bit. So I am not marking it like 5 stars important, 4 stars important, but I'm also not saying this is read only. So we will do it properly. Okay. Drawing an audit plan. The first important thing to doing an audit is first we'll make an audit plan. How will we draw? It should be based on what kind and level of operations is happening. So suppose I am appointed auditor, let's say of Surat District Cooperative Bank or Surat People's Cooperative Bank. Now I know that what is the level of operations of that Surat District Cooperative Bank? It is limited to one city. It is not in multi-state. It does not have many branches. So whenever you are given audit, first see that what kind of transactions they do and what is the level of operations. Then what are their main negative problems? So in cooperative banks, what did I tell you? What is the major negative problems in a cooperative bank? Do you remember I told you? What is the most negative feature in a cooperative bank? What is the most negative feature? If you remember, I told you. Reckless advancing. Do you remember? Reckless advancing. Disproportionate loans to directors and their relatives. Do you remember? Reckless advancing. Cooperative banks, I'm not talking about rural banks. We studied in cooperative audit, the previous chapter. I told you now, if disproportionate advances are given, reckless advancing is given without proper securities, loans to relatives. So that is an adverse feature of cooperative banks. But like you said, in rural banks, what is the adverse feature? In rural banks, what is the adverse feature? In rural banks, lot of NPA can happen. Why? Because agriculture is dependent on environment, rains, so many this thing, deposit and lend ratio, correct? So liquidity can be problem in rural banks. So this is called as planning. So when I am appointed auditor, if all of you, if Adil, Kuldeep, Pooja, Tanu, you are appointed as auditor of a bank, will you evaluate? Oh, this is cooperative bank, so these will be the adverse features. Oh, I'm auditor of rural bank. Okay, these are the main adverse features, negative features I have to keep in mind. Understood? So nature of adverse features we need to keep in mind while planning the audit itself. Then study previous reports. This is actually the first thing we do. Whenever we enter a bank or any audit, the first thing we do is give previous audit report. Because you can see that what were the things found out by previous auditor, how many of these things are still going on, and how many of those things are being rectified. So study the previous report, and on that you will know how much problem is there in this bank. And you have to find audit risks based on internal control systems, how adequate they are, how much breach is there. So you have to do this exercise. Everyone is clear? So first you have to plan. In planning, you have to see what kind of work this banks do. What are the adverse features of this kind of bank that I have gotten? On the basis of previous report, what all problems this bank has, and what can be risks on the basis of what I'm understanding and what internal control I'm seeing. Suppose you go to the bank, okay, and lunchtime has happened. So you entered the bank and you see the whole bank is empty, even the security guard is gone. So is that an audit? Is that a risk of internal control system? Is that a risk? So that is called, so will the bank. So there might be possibility that frauds may have happened. So like that, we have to familiarize ourselves with what we are seeing around us. Okay. So that is called as drawing up an audit plan. Next, control environment. Let's understand the control environment. This is the continuation of this point. A bank should have appropriate controls to mitigate. What does it mean by mitigate? What does it mean by mitigate its risk? Mitigate का मतलब क्या होता है? So mitigate can mean overcoming. It can mean resolving. Yes. To overcome something, to resolve something, to reduce something. That is all called as mitigate its risk. So do you know in some banks, let's say Deepak Thakur is there with us, one of our student. So Deepak, suppose I have your bank account number and I go and deposit 1 lakh rupees in your account. Cash deposit. I'm giving you money. I go and deposit 1 lakh in your account. So do you know banks allow this? Anyone can deposit money in your account. Do you know that? But do you know HDFC Bank has a rule that if a third party is depositing, if a third PAN number is needed, that's okay, but I can still deposit, na? Even if PAN number is needed, I can still deposit, right? I can still go and deposit in Deepak's account 1 lakh rupees, right? Or 2 lakh rupees with proper KYC. Yes. But can I deposit with KYC? Okay. But now Deepak has gotten an income tax inquiry letter. You deposited 5 lakh rupee cash. Proof from where the money came. Is it possible that you can get an income tax letter that you deposited so much cash? So now Deepak is in problem. So Deepak got money, but still you are getting this inquiry because the money is gone into your account. Then you will have to prove that I didn't deposit it, and you can get slips from the bank that who deposited the money and all that. But do you know, to mitigate this risk, to mitigate, now I'm using the word mitigate. So this is the risk. I'm telling you about a risk that exists. To mitigate this risk, HDFC Bank created one rule that if a third party is depositing cash in your account, they can only deposit maximum of 25,000 rupees. If a third party is just depositing, if you yourself are depositing, you can deposit as much as you want. But if someone else is depositing in your account, they can deposit only 25,000 rupees. So what did HDFC do? They mitigated the risk. Do you understand now the mitigation? So as an auditor, what am I going to study? I cannot study each and every deposit and each and every withdrawal. I cannot study each and every loan. So what will I do? माहौल कैसा है, environment कैसा है, control systems की तरफ attitude कैसा है. Okay, so the control environment at bank should have appropriate controls to mitigate risk. This can give me confidence on the bank. So after my planning is done, I will start seeing their internal control systems. So a bank should have appropriate control systems to mitigate its risk, including effective segregation of duties. You know what is segregation? How many of you have created demand draft in banks? Quickly tell me. How many of you have created DD, demand drafts in bank? Maker, checker, correct. So mitigate can mean anything. Mitigate can mean eliminate. Mitigate can mean reduce. Mitigate can mean overcome. Means in some way you are handling the risk. So sometimes you mitigate the risk by completely eliminating them. Sometimes you mitigate the risk by reducing it. Is that clear, Virali? So segregation of duties means no single person can handle everything. So if I go to make a demand draft, so the person, I will put a slip, that person will go to someone else, get a signature on the demand draft, and then they will issue. Single person will not do the whole exercise of giving you DD. That is called as segregation of duties. Then accurate measurement and reporting of different positions. This is just small point. Verification and approval of transaction. This is what you were saying, Kuldeep. That is maker checker. Approval of transaction, which means one is the person who initiates and second person who approves. So one who initiates the transaction is called as a maker, and the other person who approves the transaction is called as checker. So in banks, you usually have maker checker. For even a small voucher, there will be a maker checker. Okay. Then reconciliation of different positions and results, setting up proper limits, reporting, all these are part of control environment. So in control environment, what we have to keep in mind? Who is doing the control? Does he have enough knowledge to do it? Does he have authority to do it? What is he doing? What evidence is available that he actually did it? So there is a control that has been created, but what is the proof that he is actually doing the control? When is he doing it? So suppose in bank, there is a rule. Do you know cash locker? It has to be with two people. Do you know the key to the cash locker has to be with two people? And the guard should be present when this work is done, when any currency chest work is done. So usually cash in bank needs to have two people. So let's imagine cash locker. So who has the control of cash locker? Does he have enough knowledge to maintain cash locker? What is the evidence that he's checking every day? So there is usually a register maintained that who entered the cash locker, how many times in a day who entered the cash locker. Then how is this frequency? How is the control being checked? Is it enough to prevent, detect, or correct any kind of risk? Where is the evidence kept? This register, are you maintaining digitally or physically? For 5 years, you are maintaining the registers, 2 years you are maintaining, or 8 years you are maintaining. Is the evidence properly accessible for audit? Can you provide it to me easily? Why is this being done? Why does the cash has two people? So that no single person can have control over cash. When two keys are put together, then only the cash locker opens. What types of errors were detected? How is the control performed? What are the activities? Can these activities? So this you don't have to memorize. You just have to do read for understanding. Everyone clear? This is only reading for understanding. Clear? Now, last important thing, engagement team discussions. We'll go on a small break now. Then we'll come back and do this. Okay. Technical team, 10 minutes break now. Technical team. Okay, we'll go on 10 minutes break. It's 7:20. We'll be back here at 7:30. Okay. Bye, everyone. Okay, yes, ma'am. Yes, only two people. Okay, yes, ma'am. Okay. All right. Okay. So you're back. So what we were doing? So we were just saying that in general, what is our approach to bank audit? We should have a proper, we should first plan. We should verify what kind of controls are in general there in the bank. And then we should have meet and discuss. So what did we do? We first, what did we do? We overall did a general planning. Then we went and saw what the control system is, who is doing what work, how many times they are doing it, why they are doing it, how they are proving it, how they are maintaining it, for how many years they are retaining the work. All these questions we got answered. So now we have all the information. Now, what we'll do is we'll sit together and discuss. So, all the personnel that is involved, which means this is your engagement team, okay? Engagement team will meet, including if you have any expert, then that is called as engagement team. They will meet and discuss. What should they do? They should do these meetings to gain better understanding. So I saw this. What does this mean, ma'am? You are senior. What does this mean? What is your experience? All these questions should go. Why? This is the most important thing. To assess the potential for material misstatements. Why do we check? Do you remember your basic test of controls? Why do we do test of controls, basic risk assessment procedures and test of control? Why do we do it? So that we come to know RMM. Do you guys remember SA 315? Do you remember SA 315? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. I'm repeating. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. So, we are trying to understand the bank and its internal controls. Why? So that we can find potential material misstatements. Okay, good. So, all these discussions should be properly documented. Everything should be in writing, whatever you are doing. These should be done on the susceptibility of branch financial statements to have material misstatement. It means that if something goes wrong, what can go wrong? So, what expectation? What can go wrong? So imagining what can go wrong, you have to do the discussions, and these discussions are ordinarily done at planning stage. It's done at planning stage itself. So what do you do? Discussion is done on following matters. So first remember 2 points, errors. Okay. Then 1 point, fraud and error. How is fraud and error checked? By assessing risks. How is risk formed? By maintaining professional skepticism. How can we find risk? If we maintain professional skepticism. How do we maintain professional skepticism? By being alert. See the flow. How do we remember this? So if engagement team has to do discussions, they have to go like this. Be alert. How to be alert? Maintain skepticism. If we maintain skepticism, what do we find? We find risks. Risks of what? Risk of fraud and risk of error. Can you remember? How does the point flow? We have to be alert. Alert, which means we have to maintain professional skepticism, which means questioning mind. Then, if we are having questioning mind, we can find risks. And if we can find risk of what? Fraud and error. So let's go backwards. So what do we discuss? So me and my team have come together. We have got an audit of a bank. We are discussing. What do we discuss? कहाँ कहाँ alert रहना है? Okay. Is there any conditions that is indicating that some misstatements may have happened? Okay. So did you find, oh, I found that the bank implemented a new accounting standard this year. Oh, then let's be alert. They could make some mistake in the calculation. So that is discussion that you have with your team. What other discussion? That, hi, you are new to the team, Anil. Throughout the audit, always maintain skepticism, always question, no problem. You ask as many questions as you want. Okay. Okay, I'm asking questions. I'm maintaining skepticism. I'm finding some risk. Okay, divide the risk into what is overall risk to the this banking sector, what is a risk that can affect the whole of financial statements, and what are some specific risk, which means it is only risk related to cash, or it is only a risk related to gold loans. So those are called as specific risks. So let's divide our risk into three types. Overall engagement risk, which means this banking sector itself has this risk. Pervasive risk means something that is affecting the financial statements overall, and specific risk, something that is affecting something very specific. So risks are there, which means errors and frauds can happen. Okay. Methods by which fraud can be perpetrated. So think about in what way frauds happen. So I'll give you a small example. Everyone knows gold loan. Everyone knows gold loan. Everyone knows gold loan. So, there is a method in which recently there was in news also that what did people do is that they went to the bank, they took the gold jewelry, bank tested the gold. They don't break the gold, they just test. They have a gold expert sitting who will test the gold, and then they gave the loans to the bank, to the borrower. Afterwards, they came to know when some suspicion was raised, they got some information and they came to know that there has been this whole planning going on, that only the top layer was gold and inside it was full of iron and all different metals, and it was not actually gold, it was just gold coated. And that way a lot of people took wrong amount of loans, and there was this big expose that happened. So if I'm going to a bank or an NBFC like Muthoot Finance, he told, if I'm going to some bank which has a lot of gold loans, so we should be alert that which are the methods by which frauds happen in this kind of sector. Recently, bank personnel, one manager in a private bank, I will not name, one manager in private bank got addicted to gambling. Okay, he got addicted to gambling and futures and options and online gambling of games, online games and all that. And as a manager of the bank, what he did, he siphoned off the misappropriation of funds he did from all these old people accounts. He did premature release of their FDs and diverted all the money to his account. And there was like crores of money that he used up. So this fraud happened. So now we have to be alert of these kind of things. So we need to know that we need to keep reading news. We need to keep ourselves updated that which methods are used these days, which are the popular methods by which frauds are happening. So that when you are sitting in discussion with your team, you can tell that all this I have known, all this I have learned. Okay. Next way to know is identified in previous years. Study previous year reports and see what kind of problems is usually found in this bank and which kind of error is most likely to happen. So this is the way discussions happen. So discussions happen that you stay alert, maintain skepticism, identify risk, identify methods of fraud, and identify areas of error. Everyone clear? Is everyone clear? Okay, clear. Okay. What are the advantages of such discussion? Why is this discussion important? So that engagement team can have appropriate response to fraud risks like engagement risk, pervasive risk, specific risk. Okay. So this kind of discussions are important so that you can discuss and decide that how do we tackle these risks. Then it also enables engagement partner to delegate the work to proper people. So once the discussions happen, you come to know, okay, this is a little complicated matter. Let's give it to a senior person. Oh, this is a very simple matter. Lot of risk is not there. We can give it to the junior article. So this delegation of whom to give what work only happens when you do discussions and the engagement team meets. And engagement partner may review the need to involve any specialist. So suppose I'm auditor of a finance bank which does a lot of gold loan, and I, through discussions and through internal control analysis, have come to know that there might be risk in gold loan. So I might have to engage a gold expert, so that decision I need to take, and that decision can only be done if you have discussed that it is a risk. So if you have not at all discussed that it is a risk, we cannot plan properly. So these are the advantages. Again, this is generic. I am not placing a lot of stars on it, but we have done it properly. Okay. So whenever you revise, you should revise it, but it is not a very, very, very important topic, but it is still something that is not read only. So whenever you study, just go through it once. एक बार जब भी पढ़ो, read it. Okay. Now let's come to the next part. Now we come to a little bit of auditing and accounting part. Okay. So now basics are over. Let's come here. Pay attention here, everyone. Whatever I'm writing, that needs to be remembered. Okay. Whatever I'm writing now is important for MCQ. So pay attention here. Section 29, subsection 1 and subsection 2 of Banking Regulation Act 1949. Okay. What does this act say? It says it deals with form and content of financial statements in a bank. Okay. In a banking company. And remember this point specially. Applicable to nationalized banks. Whose voice is coming? Nationalized banks. It is applicable on SBI. It is also applicable on RRB. So this regulation of Banking Regulation Act is applicable on nationalized banks, SBI and RRB. Okay. So this is in general applicable on everyone, and specifically it's applicable on these three also. Even though RRB has a separate act and SBI has a separate act, still this is applicable on all of them. Now what does it do? So there is a third schedule in the act. There's a third schedule in the act. Okay. It has Form A and it has Form B. So what does Form A says? It contains format for balance sheet, and Form B contains format for P&L account. Just remember these things. What did we see? These are all for MCQ. Okay. What does Section 29, subsection 1 and subsection 2 says of Banking Regulation Act? It describes the form and content of financial statements applicable to a banking company. And it's applicable to nationalized banks, State Bank of India, and regional rural banks also. It also prescribes under third schedule, Form A and Form B, in which Form A prescribes the format of balance sheet and Form B prescribes the format for P&L account. Till now, everything is clear. Everyone is with me? Okay. Now plus all banks need to do compliance with disclosure requirements. All banks need to do compliance with disclosure requirements of accounting standards. Is that clear? All banks need to do compliance with disclosure requirements of accounting standards. Done? Okay. Now let's talk about appointment of auditor. Appointment of auditor. This is again very important for MCQ. Again, very important for MCQ. So, how does the appointment happens? So, suppose if you are a normal banking company, the auditor is appointed at AGM, okay, by shareholders. And if you are a nationalized bank, nationalized bank is like Punjab National Bank, Canara Bank, Bank of Maharashtra. These are nationalized banks. So if you're a nationalized bank, then you have to appoint through board of directors. But in both cases, approval of RBI mandatory before appointment. Again, I'll repeat. So if you're in general any banking company, the auditor will be appointed in AGM by shareholders. But if you are a nationalized bank, which means government bank, then your auditor will be appointed by board of directors. But even if shareholders appoint or board of directors appoint, first you have to take approval from RBI if the appointment is made. So before the appointment, approval of RBI is taken. Now, for RRB, regional rural banks, the appointment is done by bank with approval. This is, please remember for MCQ, approval of central government, not RBI. Approval from central government. So in case of RRB is special. Here the bank appoints, but here the approval is taken from the central government, not RBI. Remember this. So if it's any other banking company or nationalized bank, the approval is taken from RBI. But if it's an RRB, the appointment is done by the bank, but approval is taken from central government. We are not studying NBFC. You will study audit of NBFC in CA final. That is completely different. We are only studying audit of banks. Is that clear, Shyamasundar? Okay. You will study an audit of NBFC, but you will study in CA final. Okay. So that is completely different. Now, if we talk about remuneration, let's talk about remuneration. Same as Section 142 of Companies Act. What does it mean? Same as Section 142 of Companies Act. So Companies Act has prescribed that either the shareholders can select an amount. You have studied, right? You have studied already under company law. So either the shareholders will decide an amount or they can approve a way of deciding the amount. What does it mean? So suppose you all are shareholder and the bank wants to make me the auditor. So you shareholders can say, we will pay Miss Akruti 2 lakh rupees. So either you can decide 2 lakh rupees or you can decide, okay, the payment to Miss Akruti will be decided on these parameters as on 31st March. So you can either select an amount as a shareholder or you can either decide the manner in which upon amount will be decided. So remuneration is same. So nothing different, but here only special is that if you are auditor of nationalized banks, if you're auditor of nationalized banks plus SBI, then amount of remuneration to auditor is fixed by RBI in consultation with central government. Okay. So this you special again remember for MCQ. Very important. If you're auditor of a nationalized bank, then your shareholders can't decide that how much money you will pay me. if you're auditor of a nationalized bank or SBI, your amount of remuneration will be fixed by RBI in consultation with central government. Everyone clear? So these small topics, they will not come in big theory questions much, but they will be very important for MCQ. Okay. We'll do a quick revision. Section 29, subsection 1 and 2 of Banking Regulation Act gives form and content of the financial statements in a banking company. It is applicable to nationalized banks, SBI and RRB. The third schedule of the act gives Form A and Form B. Form A talks about balance sheet. Form B talks about P&L account. Then all the banks also have to comply, banking company has to comply with all the disclosure requirements of accounting standards. Appointment of auditor in a banking company, auditor is appointed at AGM by shareholders. In a nationalized bank, it's appointed by board of directors. But in both cases, approval of RBI is mandatory. If it is an RRB, bank has to take approval of central government. Remuneration, same process as section 142. If you are auditor of nationalized banks or SBI, then the remuneration of auditor is fixed by RBI in consultation with central government. Finished. This topic is done. So exactly here we have finished it. Remuneration is done. Come to powers. Powers and all generic points are there. Same powers you have with respect to. So whatever you studied in company audit, same things is applicable. So nothing special. Now come to audit report. In case of a nationalized bank, auditor is required to make a report specially to central government. Please again mark this important. Okay. So here mention like this. This is not for everyone. Nationalized bank, special report to central government. So what are the special points we are studying regarding nationalized bank auditor to central government? What report you have to give? That financial statements represent a true and fair view or not. And if any explanation and information given is satisfactory. So this report you have to give. Whether transactions of the bank is made within the powers of the bank. Okay. So all the transactions in the bank is done as per the power of the banking officials. Then whether or not returns received from offices and branches of banks is adequate. So if you are statutory central auditor, if you are an SCA, you would receive audit reports from all the branches. So whether the returns and reports received from all the branches, did you find them to be enough, adequate? And any other matter you feel that it should be brought to the notice of central government. Is everyone clear? Why is this report being made to CG? Why nationalized bank? The report is not just for members or RBI. Why is the report being given to central government also in case of nationalized banks? Tell me. What do you think is the logic behind it? If you remember logic, you'll remember the answer. Why in case of nationalized? Public fund involved. Very good. So central government is funding that bank and hence they have to make a report to the central government also. Is that clear? To ensure that public money is correctly used. National interest involved. Correct. So in case of nationalized banks, special report to central government that financial statements are showing true and fair view. All explanation and information were given and they were satisfactory. Transactions of the bank were done within the powers of the bank. All the returns and information that was received from the branches are found to be adequate, and any other matter that comes to the notice for central government. Okay. This also, please, the report of auditors of SBI also to be made to the central government. Okay. Please remember. So State Bank of India also has to make a report to central government. That's it. Format is done here. Format same as chapter 8. Okay. Plus essays. So usually we have to see requirements of essay and chapter 8 is there. But this point, remember this. The auditor should ensure that not only information relating to number of unaudited branches is given, But quantification of advances, deposit, interest income, and interest expense for such unaudited branches should also be disclosed. So what does it mean? Suppose I am an SCA of Bank of Maharashtra. Suppose I am an SCA of Bank of Maharashtra. Just for example, let's say Bank of Maharashtra has 10 lakh branches. Okay. Out of this 10 lakh, 9 lakh are audited and 1 lakh are very, very small branches. So they are not audited separately. So when the SCA will make audit report, he has to give this bifurcation that out of the total branches, how many were audited, how many were unaudited, and he has to divide this in this 9 lakh, how much advances, and of this 1 lakh, how much advances, how much deposits, how much interest income. So you should maintain it clearly that from the 9 lakh, the total information or the total advances is XYZ crores. And from the unaudited branches, the total income is XYZ crores. Okay. Yes, central audit report only. That is why I mentioned SCA. Okay. So here, what is the information that if auditor has to do the audit, he has to not only see that information related to unaudited. So I have to mention that 1 lakh branches are unaudited, but I also have to divide that how much of the advances, deposit, interest income, and interest expenses are there for unaudited, and I have to disclose an audit report. Everyone clear? Please remember this point again for MCQ. Okay, all right. So here it is mentioned CARO is not applicable. We already know that. CARO is not applicable. Done. Now LFAR. Just write beside this. 30th June every year. Please write this. This is the only thing you need to remember. Third, long form audit report. It's to be submitted by Central Statutory Auditor latest by 30th June every year. Remember this. Rest is generic. Besides the audit report as per statutory requirements, the term of audit appointments of public sector banks, private sector banks, foreign banks, their branches require audits to make LFAR. These matters which the banks require their auditor to deal is specified. Just underline this. Who gives it? RBI. So RBI has made it told that I have to make LFAR and I have to submit it by 30th June. To ensure timely submission, you have to do proper planning. While the format does not require summary, you can give summary. Okay. Till here, everyone clear? Because very important part is done. Now I'm moving to next part, reporting to SBI, reporting to RBI, sorry. Reporting to RBI. Okay. Here mention excluding RRB. Just mention it like that. So the next point that we are studying, it is not applicable to RRB. So RBI has issued a circular regarding implementation of recommendations of Committee on Legal Aspects of Bank Frauds applicable to all scheduled commercial banks, excluding RRB. Regarding reliability of accounting and audit profession, the circular said as under. So here you mention liability and responsibility of auditor. Okay. Here we are talking about as per RBI. As per RBI circular. So RBI circular has made certain liability and responsibility on me. It's very simple. It says when I'm doing any internal audit or external, this is very important. So is this only applicable on external auditor? No, this circular is applicable on internal auditor also, external auditor also. So if I'm doing any kind of audit, so if I'm involved in any kind of audit and I find anything susceptible to fraud, means possibility of fraud. I don't even have to find fraud. If I think that something is happening, I'm not able to find it, but I think that something is happening. So even if I find possibility of fraud or fraudulent activity or any act of excess power or I smell any foul play, okay? In Hindi, it's called साजिश की बदबू आ रही है, okay? Which means you think some conspiracy, some wrong thing is happening in the bank by the way the manager is behaving, by the way things are happening in the bank. So if you suspect, okay, even if you suspect any foul play, you can refer to regulator. If you have found and still, deliberate means janbooch ke, okay? Deliberately means knowingly. If you deliberately fail, then action can be taken on you. Is everyone clear? So what does RBI say? RBI says, other than all reports I have, you have to give me. But during the audit, काम करते समय, during the audit, whether you're internal, external, or in any way you are audit, you suspect something wrong is happening. Someone is misusing the power, some foul play is happening, then you should refer the matter to me. And if you fail deliberately, you knew, but you still failed, then I can take action on you. Is everyone clear? That's it. Auditor should also have to check as per AS 250. Auditor also has to check as per SA 250 and SA 240. These are just generic points, nothing special in them. Just remember, auditor is not expected to look into each and every transaction, but to evaluate system as a whole. Okay. Can all of you see me? Suddenly I got the message that you are logged out. Am I visible, audible? Yeah, I don't know why I got the message you're logged out. Okay. Okay, I'm very much here. Okay. Visible, audible. All right. So here, this is finished. So here now, the basics are done. Now we'll start with the true essence. Now I'll actually tell that your main chapter is starting. Ma'am, internal audit need not be in compliance. Yeah, whatever I taught you till now, the banking regulation and all that, directly does not apply, but a lot of things like the Banking Regulation Act also governs concurrent audit, which means each bank can have their own rules, but the main base of the rules is given by RBI. So even for internal audit, there can be, okay? Ma'am, in Nirav Modi fraud, the PNB auditor is not capable to find fraud. So it's, as an auditor, it's very difficult for us to find forged documents. So in that case, if I remember correctly, there was a lot of incorrect foreign documents involved, right? So it is not possible that as an auditor, I will be able to find each and every fraud. So Dia, let's imagine this, that I am auditor of a bank. Let's say I'm auditor in PNB and Dia has come and taken loan. Okay. So I tell bank, show me that Dia, show me Dia's KYC, show me Dia's title document, property document, show me that you visited, show me that Dia's credit worthiness was checked. And they showed me all the documents. The documents appeared to be okay. Can I know that Dia forged the documents? Can I know that whether the land document that Dia gave is actually forged? It's very difficult. And that is why even if people have committed fraud with banks, it is not necessary that it was possible for auditor to detect it. And that is why it needs to be proven that auditor could have detected, but due to his negligence, carelessness, he did not detect. So that proof needs to be given. And that is why we have to maintain documentation as per SA 230 that I did my job thoroughly. I did my job properly. And in my course of work, it was not possible to find that fraud. And that is why we maintain our planning documents, our audit program, everything, so that we can prove that we did our job properly in our capacity and with the powers we have. It was not possible to find that fraud. Is that clear? So that is why it is not necessary that in every bank fraud, the CA will also be held responsible. Okay. Okay. All right. Next topic. Conducting a bank audit. Now, if you'll see this answer, can you see how long it is? Can you see? It's going on for 4 pages. Now you tell me. Does this mean that a common question can come, conducting and bank audit, write the whole answer? Do you think like that it can come? Okay. Which means we just need to know individual points. Is that clear? So here we are going to focus on individual points and not overall as an answer that I have to memorize. First point is this, second point is this, third point is this, not like that. Is that clear? So here we have to think that each thing is individual answer. Is that clear? Okay. So first let's start. Initial consideration of the auditor. Initial consideration. First is declaration of indebtedness. Now pay attention. Suppose I am going to be made auditor of Bank of Baroda. Okay, Bank of Baroda branch. But I already have 50 lakh rupees loan from Bank of Baroda. Do you think I should be made auditor? Do you think I should be made auditor if I am already indebted? So that is why. So before appointing their statutory or branch or central auditor, obtain a declaration of indebtedness. So we have to submit like a declaration, a certificate with our signature that I am not indebted, or if I'm indebted, this is the amount of indebtedness. So the first thing that an auditor has to do is indebtedness. First point clear? Second, you point tell me any type of indebtedness. Credit card also comes in this. Credit card, home loan, education loan, business loans, everything. Okay. Any kind of indebtedness, I have to give declaration. Now, if I am the internal auditor, can I be the external auditor? If I am the internal auditor of any branch, can I be the external auditor? No. Simple. Internal assigned that audit firms should not undertake statutory audit assignments if they are associated with internal assignments in the same year. Okay. Next. Planning. Here you don't have to go through in detail. It's repetition. So we have to do planning as per SA 300, planning and audit of financial statements. Then we have to perform procedures as per SA 220, quality control for audit work before we accept. And we have to do terms of engagement as per SA 210. It's like you are revising your whole audit. So if we are doing bank audit, first we have to plan, we have to accept assignment as per 210 and 220. Okay. What is 210? Engagement letter. And what is 220? Whether I can accept this new client or not. Okay. SA 220 quality control. Then this is very interesting. So pay attention here. Internal auditor is not right word. In bank, the internal audit department can be different and concurrent audit department can be different. Okay. So concurrent audit, usually banks prefer it to be chartered accountants, but concurrent auditor can be retired officers, can be different people. So it depends on bank's policy that who they appoint as concurrent auditor. Is that clear, Virali? But there is no compulsion that it can only be a chartered accountant. So I know that in State Bank of India, many of their home loan centers have two auditors, concurrent auditors. One is a CA and one is a retired officer. Okay. So bank can have their own system that how the concurrent audit and internal audit will be done. So they can have their own systems. Any doubt? Someone was speaking. Anything you want to say? Clear, ma'am. Okay, Viral. All right. So where were we? One second. Yeah. So now all of you know about NOC from previous auditor? All of you know about NOC from previous auditor? Ma'am, can you be an internal auditor in one branch and statutory auditor in another? Usually, as per bank policy, this is not allowed. So, if I am concurrent auditor of State Bank of India anywhere in the country, they will not appoint me as a statutory auditor. For indebtedness, children or other family member, it depends. So RBI can give you a format that whether you are indebted, even your associates, like your partners are indebted, even if you are not indebted, or your associate CA firm is indebted, or your relatives are indebted. So there is a big format. You have to fill that up. Okay. Yeah, declaration you give, then they can decide if they want to continue to give us assignment or they want to take away the assignment from us. Okay. We have to give the declaration. Then they will decide whether they will continue with us or not. So it depends on them. We will just declare whatever is the truth. What is your question, Navneet? In BOP, what is the question? You have just written in BOP. Minakshi, your point is clear. Kuldeep, your point is clear, right? Navneet is asking internal in SBI, external in BOP. Of course, yes, I can be. If I am being internal auditor in two banks, I can be external auditor in third bank, fourth bank. Usually, you are appointed external audit only one bank in a year, but you can be internal audit in multiple banks. So I can be a concurrent auditor for four banks, five banks, but statutory audit is usually given only for one bank in a year to an auditor. You can get multiple branches of one bank, but usually statutory audit for PSUs, government banks, comes only for one bank in a year to a chartered accountant. Okay. Any other doubt? All right. So, like you know about NOC, in bank audit also, we have to take NOC from previous auditor. But here, please remember this. Clause 8 of Part 1 of first schedule of CA Act 1949. Remember this. Clause 8 of Part 1 of first schedule of CA Act. So there is CA Act. CA Act has first schedule. In this, there is Part 1. In there is clause 8, which talks about previous auditor communication. What does it say? Clause 8. So clause 8 of part 1 of first schedule of CA Act tells that a CA in practice cannot accept position as auditor previously held by another chartered accountant without first communicating with him. He should get a no objection certificate. Simple. This you all know. But remember this. Clause 8 of Part 1 of First Schedule of CA Act 1949. Okay. Done. Now this is again repetition. Here you don't have to put any energy. Okay. What does our auditor have to do? Auditor has to see the terms of audit engagement properly. Okay. You have to see, you have to agree to all the work before beginning any work so that there is no confusion. Then you have to do initial engagement. So if you are appointed auditor for the first time, do you remember initial audit engagement SA 510? So you have to check that whether opening balances have any misstatements in current year, whether they are properly accounted and disclosed or not. All these things repetition. Then you have to see engagement risk. You have to see engagement risk, which means you have to see it should be done prior. Please remember this. Just remember this part. Prior to acceptance. Just remember this for MCQ. engagement risk should be assessed prior to the acceptance because it affects our decision whether we will even accept this assignment. Is that clear? That is called as engagement risk. Then create an engagement team of qualified and experienced people. And how much will be the size of your team depends on the bank. Then do the essay 315. Anything to memorize here? Please tell me. मैं कुछ बोल रही हूँ learn करने यहाँ पे. Anything to memorize here? Till now? What all you have to follow? I have to follow essay 210 for accepting engagement. I have to follow essay 220 to do the quality control. I have to follow essay number 300 for planning any kind of assignment. And now I have to follow essay number 315. That is, I have to identify and assess the risk of material misstatement through understanding the entity and its environment. Again, repetition. Okay. But why is it important? It is just telling you that when we start the audit, initial consideration, when we have to start the audit, then what do we have to do? We have to see the indebtedness. We have to see we are not doing any internal assignments. We have to see whether quality control wise we can accept the work, whether the terms of engagement are clear, whether we are getting NOC from previous auditor, whether the terms of engagement are properly clear so there is no confusion, whether initial engagement is properly there, previous auditor has found any problems, what is the engagement risk for doing this work, whether we have team, and we will understand essay 315. Next, again repetition. We have to identify and understand assessing the risk of material misstatement at financial statement level and assertion level so that we can design our FAP, further audit procedures. Now, understanding the bank and its environment, including internal controls. So we have to understand the bank to identify and assess the risk and to develop a plan. Nothing here. Understand bank's accounting process. So here, understanding bank's accounting process so that we can understand its internal control. Till here, nothing to be memorized. Come to this and mark this as important for theory. This answer is important for theory. Please mark this as important. I'll teach you, then we'll see the book. Understanding risk assessment. Okay, let's imagine the year is 2014-15. You all, let's imagine the year is 2014-15. Okay. You all are part of bank audit team. Not 2014-15, let's say 2016-17. Okay, 2016-17 it is. You are part of bank audit team. Okay. नया नया UPI आया है. Newly UPI introduced. Okay. And newly wallet systems have come. All these new things have come. Okay. People are paying online. Like say they are paying on Zomato is coming up, Amazon is coming up. People are starting to do these transactions. Now you know that people are suddenly doing a lot of these transactions and you are in the audit team. But before you are in audit team, now I can't check all these transactions. I need to see that how did bank manage this? How did bank manage this? How did bank manage this? So for example, Amazon has come or IRCTC app online booking people are doing and people are paying online. So do you know when we used to pay online earlier, you used to have username and password. So people used to put a username, people used to put a password and they used to submit. And then the transaction used to go through. Now someone in the bank must have been sitting So bank will have something called as risk committee, risk management committee. And they thought that if someone gets the password once, it is not safe. Let's do something to mitigate the risk. What did they do? What do you use currently instead of just password when you're paying online? Many places, what do you get? Two things. You have UPIN, plus many places have something called as one-time password, which means how did this idea of OTP came? Who created? So let's say Aadhaar authentication. If anyone uses your Aadhaar for any authentication, what do you get? What do you get? OTP. Which means someone was sitting at high level and saying that there should be some way to reduce the risk of fraud and error. And they thought, okay, let's come up with a new concept called as OTP. Do you understand? Do you know about UDIN? Do you all know about UDIN? I only taught you, right? We discussed in last audit report. Yeah. So what did I tell you? What was the problem happening? That an all auditors were signing on audit report, but the users of audit report were not knowing that whether this is genuinely an auditor or not. So what did ICAI came up with? How did they mitigate the risk? By bringing which concept? You did. Which means the most important way in which you mitigate the risk, in which you make internal control system work better, is by having good risk management. Do you understand now what is risk management? Do you understand what is risk management? People who are continuously monitoring the controls and seeing that what kind of risks are there and how to identify it, how to reduce it. In banking sector, where every day something new is happening, the most important way in which I as an auditor can give an audit report in which I can have some trust is understanding the risk management process in a bank. How to understand risk management? First, oversight and involvement of TCWG in control process. So the first way I can know if I'm going to a bank, whether the TCWG are just sitting and saying, oh, you managers do all the work, we don't want to get involved. Then what will I think? That the risk management process is fully in the hands of employees. But if I go to some bank and I come to know TCWG are so involved that they take a meeting once in every 2 weeks, that whether risk is properly managed or not. Will you trust that bank more where TCWG is more involved? Will you trust the bank more if TCWG is regularly involved in risk management? So the first way to understand the risk management is seeing that how much TCWG is involved. Second is, how are risks being identified? Risk management process. Okay, TCWG is there. How is the risk being identified, measured, and monitored? So the second important step to manage risk is a way to find risk. So someone found now that password is not enough. Let's have OTP. Someone found in ICAI that auditor's membership number is not enough on audit report. Let's have UDIN. So there should be a process and team who is continuously identifying risk. Measuring means whether this is a big risk or a small risk, and continuously monitoring it, that is this risk increasing, is this risk decreasing, is this risk temporary, is this risk permanent? Okay. Then after you have identified risk, what will you implement? You will implement control activities. So risk was identified that passwords are not reliable. So what control activity did the bank implement? OTP. Is that not clear? Suppose bank identified that Deepak example I gave. HDFC Bank identified the risk that anyone can go and deposit cash in the bank. So they identified the risk. What control activity did they create? That if it is more than 25,000 cash, it cannot be deposited by a third party. So controls are implemented after you have identified a risk. So the third step in risk management is control activities. Fourth is monitoring. Okay, I've implemented it. Now keep monitoring it. Whether it needs to be upgraded, whether it needs to be reduced, whether it needs to be increased, whether it needs to be expanded. So you have to monitor. And then the most important part of a good risk management system is a reliable information system. Is a reliable information system. So to understand risk management process of a bank, these are the steps. See whether oversight and involvement of TCWG is there in control process. How is the risk being identified, measured, and monitored? After assessing the risk, what controls are being implemented? Then monitoring the controls. Here it is monitoring the risk. Here it is monitoring the internal control. Okay. And then whether do you have a good system that can give you this information regularly or not. Everyone is clear? Everyone is clear? So we are done till for today. We'll just take a few MCQ and then we'll continue in the next lecture. We'll just take a quick MCQ. Pay attention. Long form audit report is to be submitted by, quickly tell me. Long form audit report is to be submitted by, very good, 30th June every year. Which body is responsible for supervising and regulating banks in India? Reserve Bank of India. Very good. Which type of bank is mainly created to serve rural communities? सब बी डाल दिए मैंने. Regional rural banks. Who appoints the auditor of a nationalized bank? Who appoints the auditor of a nationalized bank? Tell me quickly. इसमें अलग अलग आंसर आ रहे. Go back. Go back to what I told you. Go to the notes I gave you. Now all the correct answers are coming. Bank's board of directors with RBI's approval. What is an NPA? What is an NPA? See, all became B. I didn't realize when I was writing. All the answers were B today. Okay. That's it for today. I hope you enjoyed the class and we will meet next time. Any doubt you have, I'll stay here for next 1 minute. If you have any doubt, we can take up the doubts. Yeah, everything is B. You're welcome, all of you. Okay, I don't think we have. All right. I'm glad you find auditing very interesting, Kuldeep. I'm very glad. All right. Okay. Tech support, I think we can end the class now. No one has any doubt. Tech support. Technical team, are you there? Yeah, we can end the class now. Okay. Thank you, everyone. Good night.